Hello traders out there in Traderland, my name is Dez here, Grok Trade, and this is the weekend edition. The weekend edition is good through Sunday, April 8th, 2012. Happy Easter to everybody out there. And the S&P 500 sees its worst week, and get this, all of 2012. On Friday, we have unemployment rate being released. However, this is a 3-day weekend for us here in the U.S., so the markets are not open on Friday. But we do have an unemployment rate right now at 8.3%. Estimates are coming in saying it should come in at 8.2%, so a slight tick in the right direction. And a little news here, Facebook will be listed on the NASDAQ under FB, Facebook, and they are gonna have their debut in May, so that will be interesting. And let's get into the markets here. On Thursday, the markets close, all major indices in the red. However, the NASDAQ in positive territory, and NASDAQ can act as a leading indice. We have the banks in negative territory, the VIX fair indicator up 1.6%, gold up, silver up, and also crude oil up. So a lot of turbulence in commodities. They were down sharply on Wednesday, Thursday. They bounced back nicely. US dollar up 0.3%, putting some weight on the markets as a whole. And going to the charts, we're going to look at the S&P 500 first. Daily support, we broke support. Gang, I'm going to blow this up so we can really see it. Here is a major issue. On Wednesday, we do have a close that looked like it could have been right on support. However, we do have a lower high, lower low. We have a decisive close now below a main trend line, and the rising 20-day moving average acting as resistance. Not a good sign. This is showing significant weakness, and there could be more follow through to the downside as far as the daily chart is concerned. We do have a bearish divergence here on the MACD. If I go to the weekly chart, let's take a look at this. The weekly chart, we have made a higher high and a slight higher low. But what I do not like about this, instead of building a sideways base, we have a slight rising taking place on these bodies. You can slightly see that. So that is more of a bearish pattern than a bullish. If we were going straight across, that would be another pattern. That would be a high base or a flying plateau, giving something to launch from. However, I'm not seeing that, so I see these high towers, and these are upper shadows. The bulls are taking it up, but the bears yanking it right back down. Bears yanking it back down. They are selling into these rallies on the weekly. And those high towers are ominous. This is dark clouds in the distance and thunder in the distance. So we could be in some trouble. Between these two candlesticks, we do have what's called a very large bearish Harami reversal pattern in the makings. Also on the monthly chart, now we still have a lot of month to go here, but at this moment you have what's called a tweezer top, and this tweezer top can be very dangerous. This would be a bearish tweezer top. So if this does set its high, so meaning the high is already set, this could get ugly and fast on a multi-month drop here. So be watching this. We've had a nice run on the monthly bars here. It wouldn't surprise me to get a little bit of a pullback here, but again, each bar is 1 month, so it could be several months of pullback here in the markets as a whole. Now I'm going to take a look here at the Dow. The Dow has been breaking below moving averages. On Wednesday, it had already crossed below the 20-day moving average, and we continue to go southbound here. We do have a lower high, lower low. The market stalled at a major support area here. Question is, will it break that support and drop? If we do drop going into the next week, meaning that we go below 13,000, which is a key number, if we go below that in the rising 50-day moving average, we will have a triple top trend reversal pattern on the daily chart on the Dow. If I go here to the weekly chart, This one looks more bullish to me because it's more sideways and slightly down. So I see a high base being made. We need to clear 13,318. If we can do that and sustain grounds above that number, write that down, we could be in good shape here. We're staying above these moving averages on the weekly. If we go to the monthly chart here on the Dow, the problem with this is this. We have support, support, we come up resistance, and we're finding some big resistance here. We have another tweezer top in the making and a bearish harami already in the making on the wrong side of this trend line. So after a big run here on the monthly chart, this could drop, and again, I can't stress this enough, it could be a nasty little drop. Let's go to the NASDAQ. Now the NASDAQ could be a leader here. The NASDAQ, we're at support down here, we're at support here, we're at support. We had a gap down run up today. We are now closed above. So we now have what's called a piercing pattern, bullish reversal pattern to go northbound. If the markets start to rally here, as far as the NASDAQ is concerned, the rest of Wall Street might follow. So this is something we're watching very closely. If we do start to drop, namely if we get below 3,056, write that number down. If we start breaking below that, especially if we get below this 30-50 area, we're in a lot of trouble. So watch those numbers. Now on the weekly chart on the NASDAQ, check this out. We have a lower high and a lower low. Everybody else, we have an equal high, so we have relative weakness right here on the weekly. So this is a problem. We need to sustain this high level, build a base here, chop around next few months, and then launch again, because we are very much overbought like we are on all the other weekly charts. Let's go here to the monthly. The monthly, here's the problem, tweezer top. Tweezer top with the doji so far. Again, the month's not over, so anything can happen. But all I'm saying here is we need to start going bullish and fast and aggressively to take these bullish patterns or these bearish patterns that we're seeing and negate them. Because right now we certainly have problems out there in the distance. If I go here to the Russells, this is the daily. Russell's broke a major trend line here. Also broke below the 50-day moving average. Lower high, lower low, big bearish divergence on the MACD. This is a problem. We have broke the ice. If we go to a weekly chart has just been choppy on small caps, but we need to get back above 831 on the weekly for us to, say, ooh, wow, the market's going to keep going north. Because if not, we're seeing a lot of damage starting to take place already, and we could start dropping fairly quick. Next area of support would be right here around this 800. If we don't hold 800, we do have a trend line right here that could act as support, and if it does drop, it could be a free fall right here. Not saying it's going to do that. I could see some good support coming in at these levels on the monthly chart. Another big issue like the NASDAQ monthly, support, resistance, we're on the wrong side of this. We have a lower high, higher low right now, bearish harami. We're just at a resistance point on the monthly chart, which can be problematic. I'm going to go here to the banks, financials. Remember, the financials lead the markets, and we have damage taking place here. We did break down. We're down below the 20-day moving average. We have a doji though. The doji, after a pullback, it could rally here again. So this line may be something like this instead. So that's something we're watching. We are below the zero line on the histogram MACD, so that's something we're watching. We need to get back above that zero line fairly fast here. On the weekly chart, we are starting a little bull pullback here, so we are starting to see us drop. We do have a negative tick here on the histogram, so we have crossed over on the MACD. And on the monthly chart, we have a lower high, higher low. We're staying above the 50-month moving average, but we have big time resistance right here coming across 1854. We need to get above 1854 and sustain that ground to stay bullish in the markets. But this has been a nice run. It wouldn't surprise me to see us pull back a little bit here on the markets. A shout out to SFO Magazine. That's Stock Futures and Options. Just go to sfomag.com. And I just did an article for them. They featured it as their cover story. Thank you. to all you at SFO. Make sure you get registered and check out my story. And we have a free webinar coming up. I'd highly recommend that you all take this. Just go to upcoming events, click on Technical Analysis 101 online class. It's at 9 p.m. Eastern Standard Time to 10 p.m. Whoever registers, regardless if you can make it or not, you will in fact get a recording of this event, so don't miss that. Click on that link, get registered right now. We do have a mentorship coming up soon, April 21st to the 23rd. If you want more information on that, send us an email at mentor@groktrade.com. Be happy to talk with you about that. Click on Trading Videos. Make sure that you watch the stocks, which is Mark Meerkat. There are live or actual trades that he has been making. He's showing those. Great stuff. Carolina, who is doing the ETFs, Qs, perfect. Watch her videos also. Miguel right now is on a short lead, but he's going to be very active doing his videos in Spanish for all of you who speak Spanish. He's a brilliant analyst. And just to let everybody know, we will have a futures analyst coming in, and I can't wait to introduce you to this gentleman. He is awesome. So there you have it. Thank you for being a part of an ever-growing group here at Grok Trade, and thank you for spreading this to a friend. If you'd be so kind, let your colleagues know. Post our link and help spread the word. If you haven't done so yet, make sure you click on Grok Trade and be a friend of us, because we're posting to Facebook all the time on things that we're seeing in the markets, and I think you'll find that very valuable. All right, you guys are the best. Take care. Very safe trading. Leave me a comment down there at the bottom.